1 1 2 3 5 8 13 21 34 55 89 144 233 377. Ni hao. Guten Morgen. Let's get going. There's my pips right there. All right, hey, welcome to Forex Today, where we talk about Forex stuff that happened today. And then we'll plan out some trades that we can do today. Yeah, good name, but Forex Today is perfect, man. The rain in Spain, eh, YJ? Hey, wait, YJ, are you still on the road? It's been a traveling. I think Adam on vacation. Everybody's having a good one. Yeah. All right. So, anyways, hey, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hola. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com, the ECN that gives you access to Forex, energies, metals, indices, and all the things that you need to succeed. A treasure trove of tools for success. And I'm part of that treasure trove, I guess. I'm here to be your guide, provide some analysis, both technically and fundamentally, answer your questions, and be the leader of our community where we can get together and collaborate during here the London lunch, a couple hours before the New York market opens. Pretty cool, huh? Cool beans. In case you're watching a video maybe on YouTube or something, guess what? These are hosted live, and you can join us in the studio audience, so to speak. Just go to Forex.today and register. You get access to the community chat, but you can also attend our webinars. How awesome is that? And I hope everyone here in the room is taking advantage of the fact that we have an analyst team that leaves at least a dozen trading ideas every day. Excuse me. How many people are reading the posts for trading ideas at Forex.today? Yeah? Yeah, I hope you are. Again, somebody asked me, he's like, are they robots? No, they're not robots. But they're not robots posting these. Think about it. Somebody is sitting there staring at their chart and they're like, you know what, this would make a good posting. So they spend, half an hour at least taking screenshots and editing the shots and uploading them and writing down their thoughts and everything. I think it's pretty cool to have a Forex kindred spirit write out these things for you. Yeah, and like in YJ saying, and his English isn't perfect, but he's still doing it. But you have boots on the ground in Japan. Just imagine that. There's somebody in Japan worried about you and sharing their ideas with you around the clock. I think that's cool. So swing on by Forex.today and participate. If you register, you can even leave comments. I mean, that's the whole point, right? Collaboration, guys. But it's your community, right? Get involved. Participate. Participation. All right. So I guess we need to start with Euro USD, or do you want to do pound? Yeah, I guess, let's do pound. Let's do pound. All right, so guess what? There's no inflation in the UK. What? So did anyone trade the news? The methodology? Take the news spike? And somewhere between the 382 and 618 Fibonacci, trade in the direction of the initial move after the news. Oops. And that would be that zone right there. Yeah, I think YJ's English is just fine as well. Okay, so anyways, if you're going to go up second chance macro move, you never really got a 382, right? So you kind of had to just be ready to trade, I suppose. So a bear would sell that, a bull would buy the dip, and whatever. So I think what we could do now is just kind of leave it neutral. I think it'd be kind of foolish to do something now without the volatility. Why would it break? You know what I mean? But let's go over the facts. Month over month, UK CPI 0.1, and like I said, that's laughable because I don't think they could actually figure out the difference between 0.0 and 0.1. I honestly don't believe they can. And then year over year, negative 0.1. So let's just call it zero. If you strip out the falling oil prices, 1.1. They actually have 1% inflation. Okay. Well, Ahmad, what I'm not what here where do I start? Where do I start? What I'm suggesting in the news release is that you don't know what the CPI is going to be. Okay. So it's after the release that you pay attention. So after the release, you had, I don't know, 10 or 15 minutes to long it, right about the 50% mark, right off the roll reversal if you see this old high. So what you do, and I just assume you know this, I've been teaching people how to trade the news for over 10 years publicly online. In fact, I was one of the first traders to use a webinar to teach. So one of the first things I ever taught publicly was how to trade the news. So anyways, forgive me if if I don't say the obvious, but please ask questions too, right? So you get the initial break, you trade the pullback in the direction of the initial break. And so to me that's an obvious little scalp, but you don't know before. So I would never place money before news, unless you're in like hours before the news or even a day before the news. But CPI, it's not that important right now. No one's expecting huge, right? But what we did find out is if you strip out the oil price, UK is doing okay. PPI, just terrible, terrible news on the PPI side, which is the producer side, not the consumer side. So that's sort of an input price. And the other one's more of an output kind of thing. Retail prices 0.0. Just not. I guess very very neutral numbers. But the one glimpse of hope is the fact that when you strip out the fall in oil prices, UK CPI is 1.1. Now, 1% inflation. Well, nothing to dance around the hall about, right? No, Grandpa, put the fiddle away. But at least it's not negative, right? So, anyways, and German zoo, less than expected. Fine, blah, blah, blah. So, a quick update. It is the 17th of November. Is it really? Wow. Let me give you an update. S&P 500, 0.26. NASDAQ up a whole percentage. 10-year T-note trading at 2.27%. Oil, 41 bucks, is down a whole 1.5%. The CAC, wow, really? France up 2.21%. DAX up 1.86. FTSE up 1.7. Huge stock market days in Europe. Did you guys watch the video on Forex Today? I posted it from yesterday to give a brief explanation on why the European stock markets are doing well despite bad news. Oh, well, there, Ahmed asks right there. How is that possible? Watch yesterday's video. Oh, there's always a video, Ahmed. High five. So there's what we drew a long time ago on the British pig. Okay. Isn't that interesting? I didn't get the double bottom, but I did get the rise up into the 50%. Okay. And then I said it would drop. Now remember, we drew this way down in here. Remember, I had to squish this one in because there wasn't even enough room. So not really perfect on the price action, but it did pull back to the 50%. Could you see that if you were a bear, that could be a sell? Could you see that? Right? You could have the rifle loaded kind of thing. Okay, go to a smaller time frame. You see it's set up as a triple top first. You could have some micro support in here, which means it may act as resistance going into the future. So unless something fundamentally changes, and it may have with the news, we don't know, but it's your judgment call as the money manager, as the portfolio manager, whatever your title is. You need to make a decision. But if you're staying bearish, and you believe this is rolling over on the higher time frame, you still should trade the lower low, huh? And hope, I suppose, that this data on the British pound, the year-over-year core CPI shows 1%. That could move pound up. But everything else was pretty neutral, which means if it wants to roll over and fall, it certainly can roll over and fall. It's not going to change anybody's mind, right? Does that make sense? If the news wasn't powerful enough to change people's mind, they're just going to do what they were going to do anyways, right? Huh? You got to, what sometimes trader psychology is thinking about the other guy on the trade or the other gal, right? Right? Yeah, all right, so let's talk Aussie. Did you guys read the meeting minutes? Hey, I wonder if that's related. Hey, right, Joseph? Thank you, YJ. YJ, do you want to take the mic and tell us all about it? No, I'm serious. Now he's scrambling. Hmm. Well, I have to babysit my cat. Excuse me. All right, so let's go. Where do we want to look at this one? All right. How about the trend? Is the trend changed? No. No, one reason YJ is such a good analyst is I've worked with YJ for, I don't know, 6 years maybe. And I've had YJ do 100 webinars maybe 100, maybe, well, 50 to 75 maybe. He's capable. See, he's good looking and talented. Well, it's always been private. Excuse me, where's my voice today, huh? So anyways, has anything changed in the trend? These are important questions, right? Why won't this move? There we go. Should we freak out? Well, we're at the high side of the channel, aren't we? I don't know what this is. Anyways, seems like we're on trend, right? So no need to freak out on this one. Um, what direction is my bias on this currency pair? Let's see if there's any hints. Hmm. Yeah, I'll get rid of that. That's something else. Oh, I really lost my voice. Yeah, there seems to be. Now, let me ask you something in all seriousness. Are you starting to mark up your charts a little bit like I mark up mine? Are you actually drawing your support and resistance zones on your charts like this so you can go back and see what you did yesterday or last week or last month? Are you leaving little notes for yourself like a memento? Cool. Because that is key. That is key. I think you can tell I'm a bear. Look at these vertical lines. I think this is me doing a webinar on finding the top of the move. Wow, look at that. Interesting. Well, eventually it rolled over, huh? All right, so the discussion for the Aussie dollar and the RBA is whether they're comfortable at 70 or if they would rather this drop to 60. And believe it or not, if you don't know much about the Reserve Bank of Australia and specifically Governor Stevens, I love Governor Stevens. I love him. I love that man. Well, uh, and because, and I'll tell you why. I'll sip my coffee first. I love the guy because he'll come out and say, yeah, I want the Aussie dollar to drop 2,000 pips. This is the guy in charge of the value. So what does that do for a currency trader? Well, the Aussie dollar drops 2,000 pips. So he actually said that. Can you imagine what that does to a Forex market? When the guy in charge of the valuation of the currency says, yeah, I think it's overvalued by 2,000 pips. Boom! Guess what? It drops by 2,000 pips. Payday! Ching! Chow! And guess what he said after that, once it did drop 2,000 pips? Guess what he said after that? It's still overvalued by 1,000 pips. What? It's raining Aussie dollar. So 3,000 pips later, we're at 70 on the Aussie versus USD. And there hasn't been much action since we got to 70, and the RBA hasn't really said anything since we've been at 70. I kind of miss the guy. I'm like, come on, Stevens, what's going on, Bubba? And so that's why these RBA meetings, the meeting minutes are interesting. They're really freaking out about China, which is interesting because, like I said yesterday, I don't think it's a Chinese issue at all. I think it's a European issue. But so let's just say Australia is concerned, and that's all. Have they given us a clear path? Have they discussed at the RBA meeting minutes? Let's see, YJ, do you recall them discussing, that the Aussie dollar is still overvalued in historic terms? Are they talking about in any discussion about lowering the value? And I think the answer to that is no. I'm not sure. I'll admit, I didn't actually read the meeting minutes. Okay. So it's not a discussion at the moment. And what does that mean to the foreign exchange market? Not talking about it is a no. Hola, Emmanuel. So not talking about it is not doing it. It's sort of like talking about it is doing it. So no need for the Aussie USD to crash below 70. And well, that's that. So somebody want to know about the Aussie dollar and all that. But yeah, read the meeting minutes. There's one place to start. Okay. Now, if you want to be a trend trader, you're going to play this as a triple bottom. Okay. Now, WWWD, what would Wayne do? Well, I wouldn't buy Aussie versus USD. How about Aussie yen? Now, Bob says, so range bound for some time. Well, We don't know that for sure, but there's probably something better for you to be trading, and you might not get the price action you want if it's not, if the Aussie dollar is moving not because of the Aussie dollar, but because of the Australian dollar independent of the US dollar and the US dollar independent of the Aussie dollar. And in that case, you can get patterns that shouldn't occur. You could get slow rises and fast falls, and you can get caught looking the wrong way kind of thing. And you say, wow, that really flipped on me. Well, it's because you're trading the wrong pair. Okay, perhaps. And that's how it manifests itself is, unreliable price action. Well, again, you may be the only one trading it. Sorry, guys, I clicked the wrong button yesterday and it reset all my charts. So, guys, just based on relative strength, you should always try to, pick the right horse. Okay. Look at this kick off the weekly central. Beautiful. Look at that. Wow. So, anyways, if you wanted to trade the Aussie up because the RBA is not talking the Aussie down, then you could take Aussie yen. Now, remember, like when the Fed started to taper quantitative easing, they started to taper, but they were still printing billions of dollars a month, tens of billions of dollars per month, even as they were tapering. But the dollar gained strength, even though they were still doing quantitative easing, which is dollar bearish. They're still adding to the supply, and as supply goes up, the value goes down. Basic economics, right? They were still adding to the supply, but the dollar was getting strong because it was the beginning of less bearishness. And less bearishness to many is bullish because it's a change in policy, right? And so people may be playing this out where the RBA is not talking it down, so maybe that means up. Right? And Bob says, maybe people are front running it. Well, I like to think that the market is always 6 months ahead. So like you asked me, Wayne, well, what happens to the, Euro USD if the Fed raises rates in December? And I'll say, well, they already did. We already priced that in. It already happened, according to the value of the US dollar. What'll be more interesting is if they don't raise interest rates in December, then there's a lot of people that put money on that USD already. And they'll say, whoops. And that Euro USD would skyrocket. But why are we down here at 106 something? Well, because people are buying the dollar because they're going to raise interest rates in December. What have we been talking about for the last year, right? Where am I at now? I was at 450 or 350 pips just a few minutes ago. So it's already happened because we're thinking 6 months ahead. This is why, oh, hey, there's Lawrence. Where you been, L-Dub? Working hard? Yup. Good. Better than doing nothing. Oh, hang on. Would it skyrocket because traders are exiting their dollar long positions? Yes. No. So Ahmed says, or is it because they're long in the euro? No. And this happened earlier when they didn't raise interest rates in September. The Euro USD went up 500 pips. And nobody bought the Euro. And it's sort of like the Oracle talking to Neo. You know, once you understand this, you will know. But how is that possible? How could the Euro go up if nobody's buying it? Ah, when you understand, you will know. Yeah. Well, I don't get it. Puppycosh. Hey, Bahrain is going to sell 5-year bonds. Yeah, 5-year bonds, huh? Almost 6%. Wow. Really? That's some pretty high interest rates. Wow. What do I know about Bahrainian bonds? 10-year. Yeah, look at it. 7%. You know what's cool about 7%? Every 10 years, you double your money. Ho! Well, okay, now you say check Egypt. Well, that's going to have high interest rates for other reasons, like risk. People don't want to give Egypt money. That's the issue. I don't think Bahrain is that crazy of a place, is it? No, right? So, anyways, guys, if you bought right now, took $1 million and bought this 10-year Bahrainian bond, you would earn $1 million, and then at the end of 10 years, get your $1 million back. Huh, interesting. Well, let me ask you, do you think we can get back to $75 a barrel over the course of the next 10 years? Yeah, me too. hmm. Hmm. All right, I got to think about this honestly as a trader. I might be into that, yo. I need to make some phone calls. Where's Captain Pierce? I guess he's still on vacation, huh? Maybe I should fly out there. I never buy bonds unless it's in person. I met some pretty nice people from Bahrain, so anyways. Um, so anyways, Aussie yen would be the trip. But you know, we talked about this maybe yesterday and maybe last week, right? None of it's new. Oh, come on. Let's extend it up. Cool. Cool. You know what this is? Is the Aussie jobs report. It's funny how Aussie dollar does this more than any other currency pair that I can think of, or Aussie yen, and I guess just Aussie in general. You'll get this unbelievable news report, and the sucker will do 100% retracement. It's just uncanny how Aussie does that. But I think I had an order right here, which was the 50%. But I remember thinking it at the time, and it was way up here. It took forever to even get into the trade. So very interesting nonetheless. Let's add some more time to this chart. Oh, look at that. Yeah. All right. Leaving a note for myself. So I'd say if this is going to go north, it's going to go up here, right? So we're at 88. Looks like we're on our way to 90-ish, right? 89.5 to 90. What do you think? We're going to print 90? That's 200 pips. So Tico brings up Aussie CAD. I don't trade Aussie CAD. To me, it's the same thing. Okay? They're both commodity currencies. I need to pick one or the other. So unless, oh, and I see what you wrote about yen. So maybe that's what you're saying. All right, so I'll go with that. I think I know what you're saying. I don't think I even have the chart. Do I? An Aussie CAD chart? See, I just don't think that way, but I know what you're talking about. I believe I know what you're talking about. Yeah, I don't even, do I have a scan Aussie on this platform? I don't even have a scan Aussie. Okay, I'll do a new chart because I think what you're saying is smart. All right, so let's throw down a chart. Let's change it to Aussie CAD. Okay, and I guess would zoom in. Okay, then you ask yourself, is it bullish or bearish, right? Seems to me it may be bullish, right? So in this case, if you're watching this, because we're talking about currency correlation, this would give me opportunity to do one of two things. I could long, of course, several hours ago would have been the better time, right? But the logic here is I could long Aussie yen or long USD CAD or both. The problem with this is I prefer to simplify as much as possible. And I prefer to look at the world and say, Aussie's going up and CAD's going up. So I want to do the same thing. I want to buy commodity currencies. And I'll say, oh, that's because of global macroeconomics. Something like that. I'll say, risk on, baby, risk on. So I don't necessarily, on these pairs, get myself into this logic. I'll do it on other pairs, okay, Tico? So I'm not saying you're wrong, but me personally, I don't tend to do that to say, well, Aussie's strong and CAD's weak. I guess the way I would use this is if I decided it was a risk on day, which currency would I go long first? Or if it's a risk off day, which currency am I going to short first? And then I could look at something like this. And another, another scenario. So like you see on my templates here, I have a couple of things. I don't use them as much as I used to. Just the correlations have changed over time, which is totally normal. But I might pull up like euro pound. And what I used to use this for is to say, all right, if I'm trading dollar, so I'm a greenback guru. I even put a whole chapter in my book about starting as a greenback guru. Which means I'm either buying the dollar or I'm selling the dollar, but it's all about the dollar. I don't care about anything else per se, right? Like I said, simplify, simplify, simplify. So I might look at this and say, all right, today I want to buy the US dollar. And I want to know which one is weaker, euro or pound. And I would look at this and say, oh, euro is weaker than pound. I guess today I am going to look to short the euro and buy me some dollars. That's how I would use this. Okay? But again, it's about the dollar, not about the euro. By the way, look at this trade I set you guys up on. Look at this. We just hit the 2618 of that drop. See, lower low, lower high, lower low, lower high. Could have shorted again. Lower low, lower high. And look at this, right into the 2618. 1, 2, 3, 4, 5 weeks worth of trading, right off the monthly R1. Oh, snap! But of course, that wasn't the monthly R1 at the time. It just, full disclosure, right? Is anyone working on letting their trades run longer? It's one thing I asked you to do, right? It's one reason, like, I've left this trade open, because this goes back to our conversation. At that time, I'm like, let it run, let it run. All right, it's only 340 pips now. All right. The sad thing is I moved my stop on the Aussie yen, and it's continued up, and I only got like 85 pips out of it, something like that. I moved my stop when it was 120. Oh, that's right. I moved it to 75. That's right. And I got knocked out with only 75. And it would be up many hundreds now. See? Should have just let it run. One day I think you'll get it. And what you'll get is that it's so much hard work to every single day come in and make new trades. And then on the long run, what will happen is you'll just do better picking trends and letting the trend do the work. Not you buying and selling, selling and buying, buying and selling, selling and buying, buying and selling, selling and buying. Day in and day out, 8 hours a day, 12 hours a day, 15 hours a day. Versus just letting your trade sit for weeks. I mean, look at if you had just, I know it sounds funny, if you had just done this, but there are lots of opportunities to have made this trade if you wanted to trade this, right? We know the euro's weak. We know the pound is strong relative to the euro. And there are times when people are not so sure about the pound, and then they buy it back, and then they're not so sure, and then they buy it back, and then they're not so sure. But most of the ups is just simply, the British pound, people taking profit on the British pound. But we have a pretty logical, intelligent, fundamental trend here. And there are some beautiful technicals to trade. There are lots of setups here. Any one of these, you could have just moved your stop and just left it there. Right? Remember talking, I said, look, if you did this, maybe by the end of the year, you could have 12 open trades. You guys remember having that conversation? It was, I don't know, late summer. It was like August, September. And I said, and you get knocked out a lot at break even. I said, don't worry about that. Just part of your trading should be focused on this, right? Just at least once a day, try to get in a trade, a smart, intelligent trade. And when it's in profit, just kind of leave it. Don't move your stop too quick. Wait a day or two, then move your stop to break even, and just try to hold on to it till the end of the year was the conversation. This was back in late August, early September. I said, just once a day. Out of 50 days, maybe 12 of those trades will stick, right? Everything else will break even, but it's a small part of your, it's not the only thing you're doing. But there are plenty of trades that should be up 500 pips now. Plenty. 250, 350, 450. There are plenty of trades that have paid that much. All right. So just try to add it to the repertoire, is all I'm saying. Okay? Yeah, power. Well, you know, Baltic Dry Index. Yeah, I saw that. Very low. Very, very. What was it? 520. Where did it go? I just had it here. Oh, there it is. 537. Yeah. Wow. Don't forget, Kiwi's going to move. It's a little less than 45 minutes. 41 and a half minutes. Kiwi's going to move. So why don't we set that up first? That's my little secret for you that you don't hear many other places. So get ready. This is going to move. Get. My name's WMD, and I'm about to get moony. So yeah, the dairy auction's coming out. Isn't that funny? So it's actually interesting because Trade the News posts it for me now. I actually contacted them, and I'm like, I need you to tell me the dairy auction results. And so they actually track it now, which is really nice. So, actually, you know what? Why don't I bring up the website? Do you want to see the website? You want to be part of the cool kids club that tracks these things? I always forget the name. It's got a cool name website, um, but I always go to the wrong one first. Dairy for Life, and then how do you get to the auction? Hang on. Latest news or co-op. Where's the auction? Is it Global Dairy? Yeah. Okay. Thank you. Global Dairy Trade. Yeah. I'm on the other one. I'm actually on the Fonterra. Okay, here it is. It's a beautiful website. Isn't that nice? It's a very nice website. They've put some real money into this. Thank you, by the way, Sylvester. Appreciate it. So, how many people have learned this trade from me, from Uncle Wayne? Cool. By the way, there's a Forex expert that's promoting a paid education program about the Mexican peso. Have you gotten any of these emails? I've been teaching people the Mexican peso for 8 years. I have one particular setup. I don't know what his particular setup is, but I'll teach you that someday. Not to detract from his course or anything, but if you want, if you're interested, I'm not sure if it hits as much anymore with all the different global macro data, but it's an interesting thing. If you remind me, I like to do this near the end of the month. So if you remind me, when after Thanksgiving, I'll set you up on how to trade the Mexican peso if you want. Right, it's a repatriation trade. Yeah, I've been doing that for forever, forever. I guess, let me tell you, I could probably tell you based on the data. I bet you it's 2005 I've been doing that trade. So, anyways, yeah, the Western Union trade, it's not far off of that. So, I don't know what the other guy is teaching, but it's interesting. So, anyways, this is the globaldairy.com, the global dairy trade. This is milk and milk products, dairy and dairy products like milk, powdered milk, curd. There's all these different interesting products. Okay. And they auction them off. I mean, it's supply and demand globally for dairy products. And so the prices they fetch will affect those that are producing the dairy, and those that are obviously buying the dairy, they're going to have to pay more or less. New Zealand, as a percentage of their GDP, exports a lot of dairy. Sort of like South Africa produces a lot of gold. Well, this is white gold, white New Zealand gold. Okay, so oh yeah, last week. Thank you, Wyatt. Yeah, remind me last week. I have it all in my brain, right? So, but it doesn't make sense to teach you now. So anyways, this affects the Kiwi. Okay, and prices going down. Wah wah wah. Look at that, down 7%. But the funny thing is, this has been going down for a bajillion years. So let's take a look if they'll show us this farther out. Okay, look at since 2013. I'm going down in a burning ring of fire. I go down, 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 and the flames get higher, and it burns, burns, burns. That ring of fire, that ring of fire. Yeah, look at this. Roll reversal, drop it like it's hot. So anyways, it's been pretty bearish for a year and a half, 2 years. Okay? But so down, if you were to plot the value of what, Kiwi dollar since then, let's do that. Just for fun. What was that rate, A? Let's do Kiwi. Where's my candy? There it is. Right. Let's go. I guess we're gonna go weekly, and I don't have enough data. Dope. There's a glitch in the matrix. Well, this gets us back to only April. Ah, shoot. Let's see if there's just not enough data. Well, all right. So, all right, this gets us April 2015. All right. Well, let's just look at it. April 2015. April this year? Anyways, look, down, 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 down. All right. And then there's a little recovery, and then down, 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 right? So that's it right here. Down, 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 recovery, down, down, down. Those are weeklies. These are weeklies, and these are dailies, right? So you got to, well, I guess we'll go back to that. But zoom in. Okay. See? Down, 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 up, up, down. So there's a high correlation, don't you think? So a bad number, and what's bad? How about a giant negative number? Let's see. Negative 7.4. Does that sound like a good number? I mean, we don't know. It's all relative, right? The way my mom and papa raised me, that looks bad. So, down she comes, right? I mean, actually, look at this chart here. Okay? Negative, 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 negative. Green, 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 green. Down, 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 down. So this is not negative, but it's less than the month before, right? Down, 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 down. Check that out. Up, up, right? Down, down, up, 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 down, 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 down. Very similar. So that would be a positive, high positive correlation. So dairy prices, yes, you need to track dairy prices. Oh, but I'm just a currency trader. Uh-huh. And New Zealand just sells a lot of milk. That's all. Yeah, I got it. So something to pay attention to. That's not till 9 o'clock, and we're coming up to the 8:30 news. But just put that on your radar. Who would have known, huh? Boy, looks like we're attacking the 21, huh?
The October CPI data in just a few seconds.
This is brought to you by TradeTheNews.com. Okay, this is the hourly 21.
CPI 0.2% is in line with expectation. Core at 0.2% is also in line year over year. 0.2% is 1/10 higher than expected. Ex-food and energy year over year at 1.9% is in line with expectation. Real average weekly earnings at 2.1%, down from 2.3% prior.
Cool. Well, if we can keep this going, it'd be great. So notice it's off the hourly 21, huh? We'll see. The bottom side here, just imagine if you were doing an inverted head and shoulders, the bottom side is there. So if it's going to stick, we got to break through this. I'm not so worried about a double bottom. I'm more worried about this area here than I am about a double bottom. So back to 350 pips. Woohoo! Hi! Love it. Artem's something to dancing in the street. Yeah, it's funny, I didn't even see this one. I wasn't paying attention anymore. Look at that. Ciao.
Headline and core readings, looking at some of the underlying categories. Apparel spending continues to decline, minus 0.8% in October versus seasonally adjusted minus 0.3% in September. We did see a snapback in gasoline prices after falling 9% in September, rising 0.4%. Medical care costs also rose 0.7% from 0.2% in September.
Okie dokie. Tell you what, so we got that moving on. It doesn't change anything, does it, by the way? I'm assuming you heard. month over month came out as expected. Core came out of it as expected. What year over year? I mean, year over year 0.1 versus 0.0. Woohoo! Once again, I don't believe they can actually forecast that detailed, but maybe they can. They're pretty good. You know how bored I get. I love challenges, so I signed myself up to take a course, even though I'm in university already at Harvard, learning complicated things. I'm like, hey, I found this course that the IMF gave out on economic forecasting using models and stuff. I'm like, oh, the IMF? The IMF is doing something? Oh, yeah. So I signed myself up for the course. Holy crap. It's so hard. It's like PhD ridiculous. Like, wow, I don't even know what they're talking about. Is that English that they're using? They're like, it's all PhD talk. I'm like, wow, I don't know what they're talking about. It's like you can ask Google and Google wouldn't know. So maybe they are that smart where they can gather such complicated data from all these different data sources and model it all out so that they know the difference between 0.0 and 0.1. But oh yeah, Wyatt, it's like ridiculous. It really is for PhDs, I think. It was fascinating though because it was using their modeling software and stuff. But um, what I like is I like common sense stuff, right? I like this idea that if New Zealand sells a lot of milk globally relative to other countries, that if the number comes out good, like milk prices go up, that would really benefit New Zealand because they're selling milk at higher prices this week than they did last week. They're going to make more money. Money's going to go to New Zealand. Dairy's going to leave New Zealand, right? Fair trade, right? I mean, look, if the Kiwis produce too much milk and they have surpluses of milk, they would be happy to just have money instead of milk that they have to throw away, right? I mean, it's good for New Zealand for prices to go up. Cool. That I get. And that would create demand for the New Zealand currency, and then the value of the Kiwi goes up, and we got it. Smart. Wow, this other stuff is just holy smokes. Like another planet. Like I don't know if they're teaching me how to build a warp drive or how to predict the value of the New Zealand dollar. Like crazy. But yeah, maybe someday. I just thought it'd look good on my LinkedIn profile, right? Like, oh yeah, I took this course on, economic forecasting using modeling software given by the International Monetary Fund. I'm like, yeah, that would look good, except I'm not smart enough to do it. Oh, I'm smart enough. I just don't have the education background to do it. But very interesting stuff. So it doesn't have to be that complicated, I guess, is what I'm saying. But there's room in the world for PhDs if they want to make it that complicated. So I'll tell you what. So we got the news out. Why don't we do this? Why don't I wrap up today's webinar? I'll upload the recording. I'll put it to YouTube, and then once it's on YouTube, it gets moved over to Forex.today. You can leave all your comments and stuff there. That'd be really great. And then for those with a live trading account at TradersWay.com, why don't we gather in in the link? Where's the link? Let me give you the link now. It'll only work if you have an account, just so you know. And we'll get together and we'll get the dairy auction together. How does that sound? Oops. Let me get that link for you. Oh, did I lose the link? Hang on. I don't have it on that browser. Let me get a different browser. And we could trade that together. Let's see, private office, there it is. All right, so if you have a live account, what I'll do is you've already signed up for the special event list, right? Thank you. That's the correct one. Here it is too. Oh, but mine's a redirect. So yeah, that is correct. So I'll tell you what, guys. You've already signed up, right? Because you signed up for previous special events. I'll just invite you. Okay? If you haven't signed up yet, click that link and you'll get to a window like this. You'll need to open an account first. Okay? I guess there's too much going on. And then once it's open, then this link will work. Oh, there it is. Look how complicated the form is. Yeah, you'd have to fill out that form. I mean, it's super easy, right? Come on. That's it. I mean, seriously, that's all it is. So that if you have that filled out, next time you click on the link that's posted here in the chat, it'll take you to the webinar form. And then I'll send you an invitation, okay? Everybody good? Like in 20 minutes, 15 minutes? What do you think? I just need to shut this down, upload the video, and then I'll go over there and we'll just do it for, I don't know, 5 or 10 minutes. We'll get the news together and see what happens to the Kiwi dollar, and then we'll talk amongst ourselves and then move on.com. What do you stink? Smell like a plan? Peace on earth. May the pips be with you. May our profits be above average. And like I said, look, open a demo account. How long would this take you to fill out? It would take me less than 22 seconds. And I doubt I'm special. Forget. All right, I'll see you on the other side. Thanks for being a client, guys. Cheers.